Welcome back to the Wall Street Podcast.
Glad to be here.
Today we're digging into the Wall Street Journal from Thursday, July 31st, 2025.
Yes, it's a packed edition, covers the U.S. economy, Fed moves, those tariffs, and AI's impact everywhere.
Our goal, as always, is to break down these complex pieces, make them clear, maybe even actionable for you.
Okay, so where do we start? The economy.
Let's do that. U.S. economy and the Fed. The Journal noted Q2 GDP growth came in at 3% annually.
Which sounds pretty good on the surface.
Right, but the first half overall, just 1.2% growth. So a bit of a mixed picture there. What's really happening?
Well, you have to look under the hood. Key demand indicators, things like final sales to private domestic purchasers.
Stripping out the noise like inventories.
Exactly. Those indicators actually showed some softness. They hit a low we haven't seen since, Q4 2022?
Okay, so that explains the caution. Businesses are likely feeling that underlying softness.
Precisely. And this puts the Fed in a tricky spot. They held rates steady again, 4.25 to 4.5%.
That's the fifth meeting in a row, right?
It is. But crucially, this time, there were dissenters. Two officials actually wanted to cut rates now.
It's unusual. So Powell's balancing act continues.
Absolutely. Trying to keep inflation down without hurting the job market too much. Investors, meanwhile, seem to be betting on a September cut.
Okay, and while the Fed's dealing with that, President Trump's tariff policies are creating their own waves.
Big waves. The Journal highlighted a new 50% tariff, this time on U.S. copper products specifically, not the raw material itself.
And the market reaction.
Copper futures plunged about 20%. That's a near-record drop for a single day.
Wow. And it's not just copper, is it?
No. Brazil's facing 50% tariffs on things like coffee. Expect price increases there. India is seeing new 25% levies, too.
So what are the concrete effects? How are companies handling this?
Well, it's hitting the bottom line. Ford, for instance, reported an $800 million loss in Q2.
$800 million. Ouch.
And Nissan estimates the impact for them is around $2 billion. Porsche took a $400 million hit. Hershey adjusted its outlook down.
So real financial pain. And there are legal challenges, too.
Yes, ongoing challenges questioning the president's authority to use emergency powers for these tariffs. That adds a layer of strategic uncertainty for businesses long term.
Right, makes planning very difficult. Okay, let's shift gears. Tech and AI.
A major driver, obviously. Big tech is performing strongly, largely thanks to AI. Meta's revenue jumped 22%, AI boosting their ad business.
And Microsoft.
Azure, their cloud unit, grew 39%. Again, huge demand fueled by AI. But this requires massive investment.
You mean data centers?
Exactly. They're projecting over $30 billion in capital expenditure just for the next quarter.
Incredible sums. Beyond the revenue, though, how is AI changing the actual work, especially for new grads?
It's reshaping things fundamentally. We're seeing about a 50% drop in entry-level hires at top tech firms since 2019.
50%? That's huge.
It is. And unemployment for new college grads is sitting at 6.6%. Companies like Carlyle are now building AI training right into their onboarding. The focus is shifting.
From what? Grunt work?
Sort of, yeah. Less grunt work, more judgment, using AI tools. But this also raises new questions, like who pays for all the power these data centers consume? Disputes are popping up already.
Interesting point. Okay, beyond those big themes, any other notable business stories?
Well, brokerages like Robinhood are having boom times, as the Journal put it. Q2 trading revenue up 65%. UBS also beat expectations, market volatility helping them.
So volatility isn't bad for everyone, but some headwinds elsewhere.
Definitely. United Health lowered its 2025 earnings outlook quite sharply. They cited Medicare funding changes plus ongoing DOJ investigations.
Okay. And Novo Nordisk?
Facing pressure on Wegovy, their weight loss drug, competition from cheaper, compounded versions, custom-made alternatives from pharmacies and also from Eli Lilly.
Right, the compounding issue is significant. Anything surprising?
Maybe the mall sector. The recovery seems to be reaching beyond just the top-tier properties now. CBLer Properties bought 4 mid-market malls for nearly $180 million.
Interesting. Middle market malls showing life. Okay, let's synthesize this with a few key questions. First, what's the core tension between the economic data and Fed policy right now?
It's that headline GDP number versus the softer underlying demand. The Fed is caught trying to manage inflation risk without derailing jobs, all while dealing with the added complication of tariff impacts. That's causing visible splits internally.
Makes sense. Second question, beyond the immediate costs, how are these tariff policies really changing things for companies and supply chains globally?
Companies are forced to either eat the costs, which hurts profits, or completely rethink their supply chains. And the legal gray area around the president's tariff powers just injects long-term uncertainty into any strategic planning.
So it forces potentially costly long-term shifts. Finally, AI. How fundamentally is it changing the job market for new graduates, and what does that imply for developing talent?
It's drastically cutting down on traditional entry-level roles that involved more repetitive tasks. New grads now need critical thinking and AI skills right out of the gate. It's not just about learning on the job anymore, it's about having these baseline competencies. This forces companies to rethink talent development entirely.
A higher bar from day one, essentially.
Today's deep dive really underscores how tangled economic data, policy decisions, and rapid technological shifts are right now. It's a complex landscape.
We hope breaking down the journal's insights gives you a clearer perspective for your own analysis and decisions. Thanks for joining us on the Wall Street Podcast.